This year in financial markets, they've been led by gold, up 16%, and gold mining shares up by 40%. Over time, gold has tended to do well when investors and savers are worried about the security of their money. In Roman times, gold did well when they were physically debasing the coinage. In the 1970s, gold did well when there was rampant inflation and the dollar bills and pound notes in people's pockets were worth less and less. So it's a little bit surprising now, when there's no inflation, that we see gold rising so sharply. So why is it that this has happened this year? I think there are two reasons. First of all, we've seen a clear move towards negative interest rates. We saw that in Japan in December last year, and the ECB has recently gone further negative with its interest rates, and there are negative interest rates also in Denmark and Sweden. And so this means that savers who have money in cash and bank deposits actually losing money through doing that. And that's something they feel very unhappy about. And the second reason has been quite widespread discussion around the world about the possibility of abolishing physical currencies. Obviously not quite there yet, but in times to come you can see the attractions of having all money purely digital. For governments, this means tax revenues are much easier to collect. And also it makes criminal activity and money laundering much more difficult. So there are clear advantages, particularly for the authorities. For investors though and savers, this is quite scary, because if all your money is held online, then in theory it becomes much more vulnerable to being taken away by government diktat at any moment the government so choose. So investors are now increasingly concerned and thinking about what really is money and what really counts as wealth. And for these reasons, I think we've seen a clear uptick in the demand for gold so far this year.